Good evening. Thank you for joining Corporate Connect. I'm Eileen and I'm your host for today. This evening, we welcome senior management of Comba Telecom as well as our audience from Facebook Live. This webinar is organized by SIAS and supported by SGX Group. We will kick off today's webinar with a presentation by Ms. Amelia Tan, research analyst from SGX Group on the recent market highlights, followed by the corporate presentation by Mr. Ken Chang, Executive Director and Group Chief Financial Officer, and we will end off with a Q&A session. Established in 1997 and listed on the main board of Hong Kong Exchange in 2003 and the main board of the Singapore Stock Exchange in January 2023, Comba Telecom is a global leading wireless solution provider with its own R&D facilities, manufacturing base, and sales and service teams. The company offers a comprehensive suite of products and services, including base station, antennas, and subsystems, network products, services, and wireless transmission to its global customers. Headquartered in Hong Kong, with manufacturing bases and R&D centers in China, Comba Telecoms provide wireless communication solutions and information application services to customers in more than 100 countries and regions around the world. Without further ado, may I just first invite Ms. Amelia Tan to give us an update on the market. Over to you, Amelia.
Okay, hi everybody. Let me just quickly share my screen in terms of the slides, and then I'll do an update on the Singapore market. So what you see on my screen, you should be seeing it now. We'll move on to the next slide. Okay, this one is a generic disclaimer indicating that what I'm going to be sharing today is more for market highlight, market update, meant more for educational purposes, awareness, not meant to be seen as investment advice. So everybody should do their sort of due diligence before they make a trade. Okay, now let's move on to the first slide that I wanted to talk to everybody about. 5 reasons, I guess, I wanted to leave with everyone. 5 sort of key reasons or nuggets as to why the Singapore market has remained attractive for investors and it will also continue to remain attractive for our investors over here. Now, the first reason would be in terms of defensiveness and also the resilience of the Singapore market, in particular the STI. Now, if we look at the STI and how it has done over the last year in 2022, you'll see that against some of the other markets over here, the STI has actually generated 8% in terms of price gains and over 9% in terms of total returns. That includes dividends. And that was one of the strongest performing developed benchmark across Asia Pacific as well as across the world globally. So if you look at some of the Asia Pacific indices as well as some of the FTSE developed, FTSE emerging markets, generally across the board, 2022 has been a very challenging year. But despite that, STI still achieved 9% in terms of total returns. So relatively, comparatively resilient in nature. Now, some of the reasons why the resilience investors might wonder, of course, the global reopening theme was something that played out for the whole of last year and will continue to play out. And in fact, one of the stocks, SIA, that I'll be covering later on, investors, you can see sort of that happening, right? The return of travel, global reopening theme, that coming back into the market. And also for this year and next year's onwards, the growth expectation in Asia. In fact, Asia is expected to be one of the highest growths, contribute to one of the highest GDPs globally, amidst slowing global growth as well as elevated inflation. And one of the sort of reasons why STI had been good performance over the last year was generally because of the financial sector, in particular the banks. Now, banks have been a beneficiary up till now from the rising interest rates environment. If you look at the STI on the right, chart on the right, the banks actually make up 45%, which is close to half of the STI's key sector combined weights. And that has been one of the key drivers of the STI for 2022. Now, in the next slide, 4 more reasons as to why the Singapore market for investors. Second reason would be currency strength. The Singapore dollar has been relatively strong against the USD throughout 2022. And in fact, because Singapore is one of the world's most open economies, we rely a lot on trade. Our total trade, in fact, exceeds about 3x of our GDP. So the currency strength is an important factor for us. And a third point would be more of a did you know, right? For Singapore market, we're not just a domestic market. If you invest in Singapore stocks, you're not just invest in Singapore companies. For example, Comba, they're actually primary listed in Hong Kong. Recently in January, secondary listed in SGX. So SGX provides investors with the kind of access and opportunity to tap onto some of the companies that are listed in and have businesses in the region as well as globally. And in fact, 40% of our listed companies' market cap comes from overseas. Another factor is if you look at the STI's revenues, the chart at the bottom, it shows that about 50% of our STI companies generate revenues from outside of Singapore. So it's not just about the Singapore story, but it provides access into the region as well as the global markets. And if you look at our companies, we've got 650 listed companies on the exchange. Almost 1/4 of our companies have at least 1/5 of their revenue coming from ASEAN. So giving you that kind of regional exposure. Fourth point is we're known as a dividend market. If you look at the STI, the yield is around 4 to 4.5 times. In fact, our banks distribute a dividend yield of about 5 to 6% already. And comparatively, our yield in the Singapore market is generally higher than the regional as well as other markets across the board. And the last point, of course, is undemanding valuations. SCI currently trades at a forward PE of about 12 times, forward price to book of about 1 to 1.09 times, and is trading near historical average, comparatively lower than some of the other markets out there. Now, the next slide talks about 2023 and how it has performed on a year-to-date basis. Now, the STI, we take a look at the 3 best performing stocks that I wanted to highlight across, 3 best performing stocks, and they were Sembcorp Industries, Keppel Corp, as well as SIA, Singapore Airlines. In fact, Sembcorp Industries in the year-to-date has returned, I think, close to, I just looked at the numbers earlier on, has returned close to, I think, 65% in terms of total returns. Keppel Corp has returned about 40% total returns, and SIA has returned 16% in terms of total returns. For Keppel Corp and Sembcorp, what we've found in terms of the neutral, what is a common topic in these companies and what has been a driver of growth for them this year, end of last year as well as this year, has really been the green energy or green transition, i.e. businesses towards renewable energies, converting some of their portfolio from brown to green. So for example, Sembcorp Industries, they have mentioned before, and they always keep reiterating this point in their updates, is that they're committed to transforming its portfolio from brown to green in support of the global energy transition. And if you look at the sustainable solutions, they contribute close to 30% of whatever Sembcorp Industry is earning today. And the target is to reach from 30% today to 70% by 2025. And if you look at its operations, it has grown its renewable energies capacity by 60% year on year. And some of the recent updates include things like they've recently commissioned Southeast Asia's largest energy storage solutions. They have also fairly recently sold off one of their stakes, their subsidiary Sembcorp Energy India, which comprises 2 of the supercritical coal-fired power plants completed in January 2023, the sale. And also most recently, last week, if you saw 2 pieces of news from Sembcorp Industries, number 1, they've commenced preliminary discussions on the potential sale of SemWaste, which is their waste to management business. And they've also, under Sembcorp Gas, their other subsidiary, have recently signed an agreement to import natural gas coming in from Indonesia, which will commence starting in 2024 for a tenure of 4 years. So a lot of news drivers over there for their renewables business. In terms of Keppel Corporation, they've also got their vision, right? Keppel Corp Vision 2030. In their latest earnings on April 20th, they've announced that their first quarter 2023 group's revenue actually exceeded 2.25, about 2.23 billion or so. It's up 9% year on year, driven by some of the business segments that contributed to that would be energy and environment, urban development, as well as connectivity. And they've also shared that, their renewable energy portfolio has grown to about 2.6 gigawatts at the end of March 2023, and this was also higher versus the end of 2022. Now, at the bottom, this dark blue box over here just wanted to highlight, aside from these two stocks in a similar sort of vein, kind of industry sector, is also Seatrium. Seatrium, they have actually reported that they are, they've got some order wins in the renewables and green solutions sector. And the renewables and cleaner/green solutions comprise today around close to 40% of the group's net order book. Now, Seatrium, it was in the news last week, if you didn't notice it, but they actually will be going into the STI starting from June 19, replacing Keppel DC REIT. The third best performing stock for this year, I mentioned earlier on, Singapore Airlines. They've returned close to 16% or in fact more on a year-to-date basis. And the stock last week exceeded its 3-year high and in fact crossed the $7 mark. And in fact, this stock has been among the top actively traded stocks that we've seen over the last few weeks since it last reported its earnings. It's trading at about 3 to 4 times its usual turnover. And we're seeing from our side, right, from our desks, institutional investors have been net buying this stock, exceeding over 115 million on a year-to-date basis. Good earnings from the company we've seen earlier, 2 to 3 weeks ago. They reported that their net profit exceeded around $2 billion, which is more than a close to $3 billion swing from its previous net loss of about 960 million in the previous year. It's highlighted that with the whole reopening, more people traveling, passenger load factor has reached over 85% versus 30% just a year ago. And this story is very real. If you see some of the numbers that the tourism board is reporting every month, we are receiving more than 1 million tourists in Singapore consecutively for the last 3 months. And STB also expects tourist arrivals in Singapore to hit around 12 to 14 million this year. And they're also expecting full tourism recovery by 2024. And SIA in their latest earnings also noted that demand for air travel continued to remain robust in the first quarter and also underpinned by some of the recovery in air travel across the East Asia region. Now, we talked about the 3 best performing stocks on the STI. I wanted to touch on a little bit on the technology sector because it's very relevant for the company today that we're going to be hearing a little bit more from, Comba Telecom. Now, technology as a sector has not been the best performing in terms of 2022, but in 2023 on a year-to-date basis, it has picked up and it has been the strongest performing global and APAC sector in the year-to-date so far. Okay. Despite institutional investors net selling the sector, we're seeing a lot of retail investors coming in and net buying the sector on a year-to-date basis. And if you look at global tech stocks, they're up 25 to 30% in the year-to-date. And within the APAC region, it's also up about 14%. And I just looked at, last week's report from the World Semiconductor Trade Stats. They've published their spring 2023 semiconductor forecast. The global semiconductor market is actually predicted to contract by about 10% this year, but anticipated to have a robust recovery, growing up to 11 to 12% in 2024. Okay, and one of our stocks, ISDN, which is what I've highlighted over here in green, they've been one of the most defensive Singapore technology stocks plays in the year-to-date 2023. They've gained about 9% in terms of total return. Another interesting angle of this is that the industrial automation solutions provider, ISDN, has also recently diversified into renewable energy. So sort of an interesting flavor over there as well, right? We're seeing moving into the whole renewable energy space. Just a bit of a market update latest from our desks is that next week on Tuesday, we will see a new ETF that will be listed on the SGX, and this actually provides investors with the opportunity to ride on and capture the growth of some of our largest 30 companies that are listed in Southeast Asia as well as India. And this is the CSOP IH Southeast Asia Plus Tech Index ETF. It'll be listed on the exchange on 20th of June, and it captures performance of the 30 tech companies domiciled in India, Singapore, Indonesia, Vietnam, Thailand, as well as Malaysia. Some of the top holdings in the stocks include companies like Sea Limited, Grab, Venture Corp, Jardine Cycle and Carriage, Delta Electronics, etc. And why sort of this flavor is because Southeast Asia as well as India combined population at over $2 billion is actually forms the world's third largest economy next to US and China. And its economic growth is also expected to be one of the highest across 2023 to 2027. So with that, maybe I will pass on the time over to Ken from Comba Telecom. And myself also, I'm very interested to find out a little bit more about this company. They've got offices across over 30 offices in China and about overseas offices outside of China, about 10 of them. And they've most recently secondary listed on the exchange in January 2023 this year. In fact, it's one of our first listings for 2023 this year. So I'm quite excited, and thank you very much for hearing my Prezzo update on the market. So Ken, over to you. Thank you.
Thanks, Amelia. First of all, I would like to welcome Ken to join us. I think it must be pretty exciting to be listed in January 2023 this year. So as what Amelia has said, we are excited to hear more about the company. Over to you, Ken.
Thank you, Emilia. Thank you, SGX, to organize this wonderful event. And I'm very excited to talk about Comba and why we are in Singapore, why we are in SGX. I think it's an exciting time. Now, Comba is actually, I would say, is actually we are quite an established telecom equipment company. We have been listed on the Hong Kong Stock Exchange for about 20 years, since 2003. The company was founded back in 1997 and was listed in Hong Kong in 2003. And we are excited about our listing in SGX. We just got listed in SGX in January on January the 4th this year. Comba is actually a company. I think we are quite an international company right now. International revenue roughly represent about 35% to 40% of our total revenue, roughly for this year. In terms of product, we do a few major categories. One product we do is what we call base station antenna, where I think in China, in mainland China, roughly we have about 25% market share. And globally, I think we are definitely considered as one of the top tier supplier in the antenna field. Antenna roughly make up about 50% of our total revenue. And the next category is what we call network system. And the product mainly drive the network system is what we call small cell and some other enhancement product that help to cover the indoor coverage. For example, if someone not able to sufficiently acquire the data or having the signal to get connected to 4G or 5G, so our team will be on the ground to cover to provide the products and be able to cover the indoor surfaces for the sort of indoor and the last mile coverage. So that's what we call a network system and 5G plus business and services. Roughly it's about 20% of our total revenue. And other product including wireless transmission that include microwave, this type of transmission technology. And also we also cover what we call smart manufacturing as the others business as well. So I think currently we have a dual headquarter based in Guangzhou, which is our manufacturing and R&D center, and Hong Kong, which mainly cover the international market. And right now we also would add in addition to Hong Kong, is Singapore. Since we also get listed in Singapore, we actually very dedicated to put more resources in Singapore in terms of potentially manufacturing capabilities, R&D capabilities. And our Singapore office actually has been running for about 2 decades already. And it actually is a very important sales and service center for us to cover a lot of global clients. Comba is actually a company we're very focused on R&D capabilities. So globally, we have more than 5,000 patents. And every year, we actually get recognized by our patents, intellectual properties, and we were awarded by a lot of recognitions, particularly in mainland China. Yeah, so on the screen, you can actually see we have all these products: antenna, network system. Services is mainly the engineering execution services for operators in China, wireless transmission, and smart engineering. So these are our products. Antenna, I think, is quite self-explanatory, while the network system that include the small cell and the enhancement product, basically you guys can see on the screen. And recently, we actually have been very focused on what we call the environmental friendly and greenery products, which I will also introduce in the later slide. So Comba financials, since we announced our results semi-annually, so the latest result we can sort of talk about is as of the end of last year. And last year, I would say that Comba delivered a pretty solid result where the revenue increased by about 8.4%. Gross profit increased substantially by about 32%. Gross profit margin increased by 5.2 percentage points, while our operating expenses actually came down quite substantially. And our profit before tax is close to 300 million Hong Kong dollar, and net profit is 190 million. And we do have a dividend policy, roughly pay out about 30% of our profit. So dividend per share is 2.1 cents per year. Yeah, so this slide we talk about, basically our operating costs last year as a percentage of revenue actually has come down quite dramatically, even though our revenue, our gross profit has increased. So the company is at a net cash position, close to 800 million Hong Kong dollar. NAV per share is $1.34. So last year, a lot of measures, including a lot of turnover day, is actually quite healthy. Also see improvement. And also the company is generating good cash flow. Operating cash flow is much higher than our net profit at around 500 million Hong Kong dollar. And over the last few years, we can actually see that our debt gross gearing ratio actually has come down quite dramatically over the last few years. So yeah, you can see that basically our gearing ratio has come down from like 19% 5 years ago to roughly about 12.7% at the end of last year. Although company do have a bit of volatility in earnings, 9 out of 10 years we generate positive operating cash flow. So last year, basically, our antenna revenue has made a record high, where we actually see that from the three operators, particularly China Unicom actually has contributed a lot of increase to us. And international market, which roughly represent about 35% of the whole pie, increased by 9.3%. And as mentioned, antenna revenue actually has made a record high and increased by about 25.8%. So both domestic and international market has gone up quite significantly. So pretty much except the network system, services and wireless transmission has seen the increase in revenue. So let me talk about a bit more macro sort of environment for our telecom industry. And then I will talk about our products and how we position for the future. So globally, I think people can sort of imagine, 5G network actually has been there for about 2 years, right? However, we actually see that the 5G deployment between the developed market and less developed market are still quite different, put it this way. So countries, for example, like Japan or Korea, Singapore, in China, in the US, in Europe, roughly speaking, a little bit more ahead in the 5G deployment, while emerging market or less developed market, they're actually playing a more catch up. So we do see that the 5G deployment will continue, right? Because China, as example, right? China already at the end of last year has about 231 million, right, of the 5G base station, yeah, and is already representing 60% of the world's total. However, we do see that less developed countries, for example, like India, Brazil, and South America, etc., they are playing a catch up, right? Because I think essentially the 5G network or the wireless network are still very important for global human day-to-day operators have already sold the 5G plan, right? However, the 5G network, I think, or the base station or the coverage are still not as extensive as the 4G, right? So in other words, I think the operators still need to surface the plan by deploying more base station. So this is the sort of long-term plan that we are seeing. However, we do notice that because global operators have already spent a lot of money in the 4G, and they start spending quite some money in 5G. So the way I think the operators want to spend money would be looking for, number one is more efficient product, more energy efficient product, right? And having the equipment that are able, not only the efficient, but also energy saving, more greenery to cover those type of products. So this actually really gives us a pretty good opportunity set for Comba, because Comba, we actually have our own philosophy or belief how we are going to service our client better. Because number one, client, as mentioned, they want to reduce the cost and increase the efficiency, right? Number two is right now, 5G has been there for 2 to 3 years, as mentioned. And operators actually want more intensity, right? They want more coverage, not only the outside, right? But as you know, from 3G to 4G, 4G to 5G, the frequency actually get higher, and the wavelength for the signal actually gets shorter. It makes it harder to penetrate into indoor. So operators start thinking, look, right? Most of the data consumption, most of the wireless communication actually happen indoor, right? So when what I'm sitting also in indoor, right? I believe most of people in this call is also on indoor. So the indoor coverage actually become a quite essential for the operator to take care of. So the in-depth coverage is also one big aspect that Comba would look into it, right? And third of all is that operators will also look to become more greenery, more environmental friendly, and low carbon emission, right? This actually has been hard-coded to some of the operators, not only in China, but also globally, particularly some operators in Europe is also very ESG focused as well. And last but not the least, I think, you know, when we talk about the usage of the wireless communication, all the time we talk about mostly on the retail side, right? It's mostly your SIM card get connected, you get inserted into your mobile phone, and then you get all your communication through your mobile devices. But what is the next step? We believe the wireless communication will extend to the industry usage, which I will also talk a little bit more in later slides. Yeah, so I think the whole market, no matter international market or domestic PLC China market, also set a lot of ground for a lot of opportunities set. For example, mainland China, roughly about 2 years ago, they start getting more proactive or aggressive in building the 5G network. So as a result, why our antenna business actually has got much better in the last 2 years, particularly last year we made a record high, is because they have a lot of open bid for the open procurement for the antenna business. So we participate and we actually got a great result. The same as international market, we actually fortunate to provide our antenna product also to a lot of global players. For example, like the Indian Airtel, the European Telenoid, and MTN. So we are able to participate to a lot of open bids. So in terms of the products, I think our antenna products are actually quite, how should I say, the whole preparation or the whole different types of products are actually quite well-rounded. And right now we actually are able to go further. We are able to give a more greenery products, particularly on the antenna market. Now we have new products, what we call the green antenna. So how does our green antenna is able to provide value or empower the customer? So first of all, our green antenna are able to, number one, save a lot of power and reduce a lot of costs. So every 10,000 stations that use our green antenna are able to reduce roughly about 33 to 34 million kilowatt per year. And not only that, it can reduce the station size by about 10 to 20%. And it can enhance the quality of the network. So it actually can reduce a lot of costs for the operators and provide greater corporate value. And most importantly, also a lot of social values. Also, as mentioned, I think a lot of state-owned company, no matter it's in China or the operators globally, they're looking more into ESG value, right? So all these, I think we provide a lot of value to our customers. So yeah, as mentioned, I think we have a full package of antenna product. When we talk about antenna product, usually we talk about the passive antenna or active antenna. And we even have new type of antenna, what we call the active and passive antenna. Antenna right now is also much more tailor-made to different environment. We have antennas especially for example, for the stations, for the highway, for the stadium, for the seaport, for the shopping center, etc. So let me also talk a bit on the network system. As mentioned, for network system is mainly to provide indoor coverage or the last mile coverage. In China, we have our product, what we call small cell. And the small cell we usually get connected with the broadband, and we also have the connected to the landline, able to provide sufficient data or sufficient coverage into the indoor. And actually right now, operators, after they are spending a lot of resources and the energy in the outdoor base station. Now they're also turning more focus into indoor. And then right now, I think right now a lot of operator focus also turn into how to employ the small cell into the indoor. The same for international market. International market also right now operators more focused on what they call the in-building coverage, because they found out that the 5G, the frequency higher, hard to propagate the signal inside, and the indoor coverage or the in-building coverage actually will become more essential, will become more higher demanded. So this actually a slice of the sort of the city landscape can give you an idea. Different type of in-building, different type of environment will require how our products being engaged. So I roughly talk about how the 5G potentially in the future can empower the industry. So we do have a very total solution for the industry. We actually have tried quite a lot of 5G empowering industry sort of application that include healthcare, that include wind power, solar, industry, education. And for this slide, we want to demonstrate our capabilities in the 5G plus smart mining. And particular on this area, we have been doing a lot of projects, and it's worth highlighting. So on network system, we also talk about, and this is a bit more technical. Yeah, we also talk about there's a global alliance called Open RAN, and we have been very provocative, and we have been very active in pushing the boundary on the Open RAN by providing our expertise in helping the standardization, and as well to provide the products into this alliance. Yeah, so Comba, besides having got listed on SGX in the beginning of this year, I think we are very excited about our products, and particularly about our innovation into the new products. For example, the greenery antenna product that we are introducing. And we are also consolidating our market position in the area, like in antenna, as well as in network system. And we're also making new innovation into new products. So thank you for today's time, and it's open for question. Thank you.
Okay. Thank you, Ken, for the informative presentation. We have now moved on to the Q&A session. For audience, please feel free to submit your questions in the chat box, as well as for our Facebook audience. Do click on the link to join us in the Zoom and post your question as well. We'll try to answer as many questions as possible. May I now invite Sivanity, Senior Consultant, Senior Correspondent, Editorial and Investor Education from SIAS, to moderate the Q&A session. Over to you guys.
Thanks, Eileen. Okay, thanks, Ken, for that presentation. I think this is a great initiative to bring, to make lesser-known companies more familiar to our investors. So thank you for that presentation. I can start with questions that have already been submitted, or I can start with questions that have just been submitted. I think I'll start with questions that just have come in now. I can see two in the chat box by Daniel. First question is, are you playing in the same space as the likes of Huawei, Nokia, Ericsson, and ZTE?
No, actually.
No, yeah, I thought so.
In fact, they are our customers. A lot of projects we're actually working together. So how to distinguish, right, is the likes of Huawei, ZTE, Nokia, and Ericsson, they consider as the major equipments or telecom equipment provider, and they they do the sort of bigger macro base station equipment, and they can provide end-to-end solutions. Yeah. So Comba is a little bit niche in the products that we provide. For example, we're very specialized in antenna, okay? In antenna, we provide antenna, for example, to Ericsson. We provide antenna to ZTE, right? We also provide antenna directly to operators as well, right? So these are the differences. And number two is the likes of our products, we mainly cover the indoor coverage for network system. We don't really do a lot of outdoor macro base station thing, right? So for likes of Huawei, ZTE, they're more doing the outdoor thing, right? So to us, it's more sort of like a complementary or complement to each other, rather than like a face-to-face competition.
Competitors, yeah. Okay, thanks for that. Next question, also from Daniel. How are you affected by the US ban on sale of chipsets to Chinese companies such as Huawei? Are you affected?
Yeah, I think in the beginning, I would say yes, right? In the beginning, especially like, I think in the last, especially during the COVID time, and there's a lot of delays in logistics, in addition to the sort of international conflicts, right? But the bright side of our story is the following, right? And number one, the chips that we are using, I think is more sort of general type rather than more specific or specialized type. And right now, we are also finding more replacement by the locals as well. And we actually can get a combination of both, right? That's number one. Number two is that I think, yeah, I mean, we are listed both in Singapore and Hong Kong, right? I think, and also our business obviously is much smaller than the big guy, yeah. So in a sense, we are, and particularly the product we are doing are not like end-to-end, or we are storing any customer data. So in a sense, it's much less sensitive. And we do right now, but of course, we're also very cautious, whatever the customer need us to answer or to guarantee, we also try to make up some steps. Yeah.
Right. Okay, thank you. Okay, a question that was pre-submitted before this session. How does Comba differentiate itself from its competitors? What are your competitive strengths?
Yeah, our competitive strength is, I think, the following, right? I think we are very focused, and we are very engineering based, right? So Comba, since day one to now, we only do the this specific products, right? Especially we are radioactive sort of expert, right? So you see that actually our core competence is sort of the radioactive, right? Or the radioactive network products. And our core competence is provide cost saving, energy saving, right? Efficient product to our customers. So the product from our core competence is like, antenna, network system, transmission is all coming from our sort of engineering DNA per se. And we are very, very focused. We never, so unlike, to be honest, right, when we started the company about 20 years ago, there were a lot of other likes of our company also doing similar products, but most of them are not able to survive. Yeah, because right now, as you can imagine, telco equipment company, the barrier of entry is very high because you do have the technology, you need to have the patent, you need to have the services to customer, and a lot of things, right? So there's a lot of high entry of barrier, and I would say, being very focused, being very engineering, R&D focused is one thing. And also, I think we try to differentiate our products against the likes of competitors. As just mentioned in the previous discussion, we do not do everything from end to end, but the product we do, we believe, are good in qualities, energy saving, efficient, and cost saving.
Who would your main competitors be?
Well, it depends, right? Depends on different categories. So antenna, we have a lot of competitors in mainland China, I would say. But antenna, I think we are very, very strong. In antenna, we are either number 1 or number 2 in China. And globally, I think we are one of the top 5 players for antenna products. Whatever we can compete well in China, I think globally, usually we do not have much problem. And the same for like antenna product, but and network system, the product is also competitive as well. I think we always have been the leader in the indoor coverage since day one, actually, since day one. There's also a lot of different players for the small cell market as well, particularly in China. And for international market, I would say there are also some certain depending on different market, right? There are some markets in, let's say, for example, in the US, right? CommScope is a big company. They also do antenna product. They also do network system product, right? In China, there's also likes of company, right? So it depends on different product. There's also a group of competitors.
Right. So you're saying that there's no direct comparison. There's no company which does what you do, right?
Not really.
Offers, okay. All right.
Not really, yeah.
Okay, question from the public. What are the key risks and challenges currently faced by the company?
Well, I would say the key risk is I think the key risk is the sort of like the execution risk, I would say, is the execution is right now. I think, and it has been, our international business actually has been around for more than 10 years, right? And the international revenue as a percentage of total right now has reached, 35 to 40%, right? I think we're quite happy about the pace of we're getting more diversified across different regions. We're getting more diversified across different customers. And I think the trend should continue, right? Because I think we shouldn't just depend on one customer, one region, right? We shouldn't, depend on just particular segment, right? So, and I think this continue, right? And that actually would give us a better stability and visibility of our trend. I would say actually we have done much better than before. Before, there are certain segments that affect the other business. For example, one business did very well, but the other didn't do that well. So our result would become mixed. But I think since last year, I think every different segment actually has a very good foundation, and every different segment actually become very internationalized, not just depend on the Chinese market.
China.
Yeah, so I think we are much more diversified across, and hopefully the execution can be much better.
Okay. Another question from the public, pre-submitted, on your dividend policy. Okay, I noticed this year, or rather the latest financial year, ending December last year, you made a turnaround. The previous year, there was a loss, but now there's a profit, and therefore a dividend was declared. Total dividend was 2.1 Hong Kong cents, which represented, I think, 30 to 31% payout ratio. So I guess what this question is asking is there some kind of, internal guideline to pay out a certain percentage of your profits every year? Do you have a firm dividend policy?
Yeah, I mean, when we communicate to outside investors, and when we have our investor conference participated by our chairman, and a lot of time we actually said to outsider, it's not hard coded, but we always tell the same story, is that we have about 30% payout ratio for our profit. Yeah, and the good thing is that as long as we make profit, as long as our operating cash flow is positive, we'll attach to this policy.
Okay. All right. Another question from just submitted by Daniel. Have you been able to secure recent work with the non-Chinese major equipment vendors like Ericsson and Nokia? As I understand that many telcos are switching out of the Chinese vendors to European vendors like Ericsson and Nokia.
Yeah, great question. I think we have done a great job in those areas, and particularly those European, I would not say name, but those European telco equipment vendor. I think in absolute value, I think our sales to them actually has become higher, and I think the market share within them also has become higher. I think the trust and the bonding actually also has become tighter.
Okay.
So I think development is actually getting better. Yeah, is a very good concrete progress.
All right, great, thanks. Okay, there's still a bit more time. I also read that Comba is in a Hang Seng index, or is it two indices? One, the Hang Seng small cap index, is it? Am I right?
I think small cap, yes.
Small cap, and then only one, or I think only one.
I think probably only one, yeah.
Probably only one.
Yep.
Do you know if there's an ETF on that?
I'm not so sure, yeah.
Oh,
Yeah.
okay.
Maybe there's some ETF, there's some passive fund, yeah.
All right.
Yeah.
Okay, no, that was just my own.
Yeah.
Yeah,
just to add, right? I think as you can understand, a lot of small cap was penalized in this year, right? Because in general, the market condition wasn't that great in Hong Kong. But I think and also our share price has come down a lot. And but I think roughly about 2 years ago, when our stock in the recent high and also become more liquid, we were included into what they call the China and mainland China and Hong Kong Stock Connect, and where the mainland investor are able to direct invest into the Hong Kong stocks, which we also part of the list, right?
right.
Yeah. So I think this is actually quite a good status to have. Unfortunately, because all the small cap had dropped a lot, so we got kicked out roughly about a year ago. Yeah.
You mentioned that your stock price has come down quite a bit. I notice it's trading very close to your asset value. Your
Yes.
book, yeah, it's 140 now, and your net assets is 134. Did I see that just now?
Yes.
Yeah.
Yes.
So you're trading very close to that. Okay.
Very close to that. Yeah.
Is that, I don't know, is that normal for telcos in Hong Kong? Is that roughly where the others trade?
Hard for me to comment on other company. I mean, we haven't, as you know, I mean, we didn't have a lot of benchmark company. But
Right.
I would say this, right? It is trade very close to NAV. But if you look at our sort of market competitiveness or position of our different products, right? Put it this way, no one can just our NAV roughly is about, let's say 4 billion Hong Kong dollar. Yeah, 4 billion Hong Kong dollar, right? 4 billion Hong Kong is what, $500, right? Roughly $500. So $500, no one can actually, let's say if you have $500 million and give you like 5 years of time, you're not able to replicate our business, not even half. Let's say this, given the market condition, right? Given the positioning and all that, right? So what I'm trying to say is that the market itself, although we have a bit of up and down in our earning, I think the company accumulated a lot of, number one, a lot of intellectual property. Number two, a lot of the know-how. The know-how is not only towards the mainland operators, but global operators, global, companies like Ericsson, Nokia, right? right? And we have this international footstep, right? And also able to like having the R&D capabilities or technology, right? So that we can actually be competitive in all these areas, right? So I think there's a lot of value. What is probably not just can be explained by DCF, cash flow or PE ratio, put it this way.
I think you're also saying that there's a lot of intangible assets, right? That you
Yeah,
have
absolutely. Yeah.
to correctly
Intangible
value
assets,
your company.
which
You
is
should,
probably not fairly value at this moment.
yeah.
Exactly.
Okay. All right. Maybe there's another question. Just let me have a look. Yes, it is a secondary listing, Manseng. It is a secondary listing on SGX, which took place in January this year. Are the shares interchangeable to Hong Kong and vice versa?
Yes.
I believe yes.
Yes. So that's the beauty of it, right? So let me explain. And probably there's a follow-up question: why SGX, right? Why secondary listing SGX? I think number one is we really sort of understand this mechanics, right? So where the Hong Kong shares can be able to switch into Singapore, Singapore can be switched into Hong Kong, and Singapore also SGX give us another great sort of platform, right? Capital market platform, right? So that in the future, right, we can also do a lot more things, right, into this market, right? That's number one. Number two is I think already in Singapore we are quite established in terms of our sales and marketing platform, and we want to do more things in Singapore. Potentially, we look around. We want to do more manufacturing, potentially R&D, more strategic things, right, in Singapore. So getting listed in Singapore first, and then this actually give us a pretty good strategic angle.
Great. Okay, I think that's it. We've almost run out of time. Thanks again. Thank you very much, Ken, for taking the time to come and inform us about Comba. I'll pass you back to Eileen of SIAS.
Thank you, Ken and Siva, for the colorful Q&A. Definitely, I think the audience here had a better understanding about the company. For the audience tonight, if you find that if you have any more further questions, do feel free to reach out to the companies. And of course, in case you miss any part of today's session, you can rewatch the webinar on SIAS YouTube channel. Well, Corporate Connect is a bi-monthly webinar. Do visit our website to get upcoming updates on investor education programs and initiatives. And also, of course, I think for audience over here, you may also type in the chat box to let us know which company that you would like us to feature in the upcoming Corporate Connect. So you can type in the chat box right now. For the next upcoming Corporate Connect, we will be featuring First Read on 27th of June. Without further ado, I just want to thank Ken and as well as our audience tonight. Thank you, Ken.
Thank you, Eileen.
Thank you.
Thank you, SGX. Thank you.